As I mentioned earlier, bears might attempt to win back some losses from the previous rise. Yesterday, Eurozone inflation data released in the first half of the day showed that core and consumer prices declined from 5.5 to 5.3% in August, although the headline inflation remained unchanged at 5.3%. The drop in consumer prices eased demand for the euro and raised speculation about a possible pause in the ECB monetary tightening in September. All this led to a slight depreciation in the euro. Later on Thursday, the report on initial jobless claims was published in the US, indicating a decline below analysts' expectations. In addition, the personal consumption's expenditure price index, the favorite inflation goal of the Federal Reserve, came in line with the forecast and rose to 4.2% from the previous value of 4.1%. Against this backdrop, the US dollar appreciated against the euro and the British pound. The data on personal spending also exceeded the forecast, indicating persistent inflation that is decelerating at a slower pace, falling short of the Fed's expectations. Therefore, the US Central Bank is unlikely to pause its rate hiking cycle this year. Let's have a look at the economic calendar for today. We expect a slew of data in the first half of the day, including manufacturing indices for August in Germany, France, Italy, and the Eurozone. These data could be revised downwards, which is a strong bearish factor for the euro. This might result in a sell-off in the euro-dollar pair ahead of another important report on non-farm employment in the US. The US non-agricultural sector is expected to have added just 169,000 new jobs in August, after a rise of 187,000 in July. If the NFP data discourages the market, just like it happened on Wednesday with the employment report from ADP, the pressure on the US dollar will increase. If so, the euro-dollar pair may resume its upward movement amid improved risk appetite. In a different scenario, when the NFP data shows better than expected growth, the euro will decline and intensify its sell-off. In September or later this autumn, the US Federal Reserve may raise the rate by a quarter of percentage point as the labor market and inflation still show weak signs of cooling. The ISM manufacturing PMI in the US is also due this afternoon. The indicator has already dropped below the 50 mark, showing a contraction in economic activity. If it declines further, the greenback may ease. However, the main focus will be on the labor market and unemployment data, which is expected to stay at the same level. And now let's move on to technical analysis of the euro-American dollar pair. We observe an interim resistance on the 1-hour chart at the level of 1.0857. A false breakout at this point, coupled with strong employment data in the US and weak PMI data in the Eurozone, will serve as a sell signal with a downward target at 1.0828. A fall below this level will generate another sell signal with a prospect of decline towards 1.0799 or 1.0768, from where I will consider buying the pair on a rebound of 25-30 pips. As for long positions, they can be opened at 1.0828 after a false breakout in the first half of the day. The divergence of the MACD indicator could be used as confirmation if the PMI data turns out to be worse than expected. A surge to this level will form a nice entry point into long positions. If the quote settles above 1.0857, the selling opportunity will be lost. The entry point in this case will be found at 1.0884 with a target at 1.0908. You can sell the pair on a rebound from 1.0908 or 1.0938, keeping in mind a correction of 25-30 pips. More short positions can be placed at 1.0857 and 1.0884, where the moving averages are found, but only following a false breakout. Speaking of the British pound American dollar pair, bulls may try to protect the level of 1.2654. Today, the downbeat data on manufacturing PMI in the UK will put pressure on the pound. A false breakout at 1.2654 will create an entry point into long positions. After that, a surge to 1.2691 will be possible. A breakout of this level and a downward retest will form another entry point for going long, with a prospect of reaching 1.2722 or 1.2761, where I will consider selling on a rebound. Short positions can be opened at 1.2691 and 1.2722 only after a false breakout. If bears assert their strength at 1.2654 in the second half of the day, a sell-off in the pair will lead the price to 1.2621. Buying at this level should be done only following a false breakout. You can go long from 1.2586 on a rebound, keeping in mind the correction of 25-30 pips within the day. Good luck.